Feeling buried under your mortgage? Today I'm going to show you how you can pay it off faster and uncover the ugly truth about mortgage interest that most homeowners don't realize. If you're like most homeowners, that monthly mortgage payment can feel like it's never going to end. But did you know that there are ways to pay off your mortgage faster that could save you hundreds of thousands of dollars in interest? Today I'm breaking down 1. How much interest you really pay on your mortgage. 2. How to shorten your mortgage term with some simple strategies. Let's start by talking about mortgage interest. When you take out a mortgage, you're not just paying back the money you borrowed. You're also paying interest to the bank for lending you that money. Here's the truth. Over a 30-year mortgage, you could end up paying hundreds of thousands of dollars in interest even if your interest rate is low. The total interest can really add up. For example, let's say you have a $300,000 mortgage at 5% interest over 30 years. By the time you're done, you'll have paid almost $280,000 in interest alone. How about at 6% interest rate? You'll have paid over $348,000 in interest. And that's more than the principal of $300,000. Now, let's look at this mortgage amortization table. Mortgage amortization is a breakdown about how much of each payment goes toward principal and interest. To calculate the monthly interest on a mortgage, you can use the following formula. Using the same example, if your mortgage balance is $300,000 and your annual interest rate is 6%, so take 6 divided by 12 equals 0.5%. $300,000 times 0.5%, your monthly interest for the month 1 would be $1,500. Since it's a fixed mortgage, you pay the same amount of $1,798.65. So take that $1,798.65 minus the interest of $1,500 equals $298.65. This is the amount goes toward the principal. So each month, the ending balance keeps decreasing, and at the month 360, which is 30 years, the balance goes zero. So when you first begin making mortgage payments, most of your money will go toward paying interest. Very little of it will be used to cover the principal balance. The point at which a mortgage payment starts paying more towards the principal than interest is known as the tipping point. The timing of this depends on the loan term and the interest rate. In this example, a 30-year loan with a 6% fixed rate will usually reach the tipping point after more than 18 years. And that's why paying off your mortgage faster is so important. You can save a huge amount of money in the long run by paying less interest. But how do we do that? Tip 1, make extra payments. The first tip is simple but powerful. Make extra payments whenever you can. Even small additional payments go directly toward the principal, which means you'll owe less interest over time. Let's say you paid an extra $300 a month on that $300,000 mortgage at 6% interest rate. The loan will be paid off in 20 years and 6 months. It is 8 years and 6 months earlier. This results in savings of $110,869 in interest. Now, let's bump up to extra $400 per month starting now. The loan will be paid off in 18 years and 9 months. It is 10 years and 3 months earlier. This results in savings of $132,015 in interest. Tip number 2 is switching to biweekly payments instead of monthly. A biweekly mortgage payment is a mortgage option where you pay half of your monthly mortgage payment every 2 weeks instead of the full amount once a month. This results in 26 biweekly payments per year, which is the same as 13 full monthly payments. So when you pay every 2 weeks, You actually end up making an extra full payment each year without even feeling it. This can take years off your mortgage and significantly reduce your interest cost. Instead of paying normal one-time monthly payment of $1,798.65, take that and divide it by 2 comes up to $899.33 biweekly. And this will save you $74,440 in interest. So how do you set up a biweekly mortgage payment plan? Contact your mortgage servicer. If your lender allows biweekly payments and applies extra payments directly to your principal, you can simply send half your mortgage payment every 2 weeks. To ensure your biweekly mortgage payment plan works the way you intended to, confirm that you won't be charged a prepayment penalty or fees for setting up or maintaining the payment plan. Tip number 3, make lump sum payments when possible. If you come in with some extra cash, maybe a tax refund, bonus, or inheritance, consider putting that money towards your mortgage. A lump sum payment can knock years off your loan, and because it goes straight to the principal, it slashes the amount of interest you pay. Here's the bottom line. The faster you pay off your mortgage, the less interest you'll pay, and the more money you keep in your pocket. Whether it's making extra payments, switching to biweekly, or putting lump sums, every little bit helps. Mortgage interest can be a huge cost, but with the right strategies, you can fight back and become mortgage-free sooner than you thought. If you found this video helpful, don't forget to like, share, and subscribe for more tips on saving money, financial freedom, and crushing your debt. Let me know in the comments below what mortgage and financial topics you want me to break down in future videos. Thanks for watching, and I'll see you next week.